The Fed keeps hiking rates. How will this affect the mortgage rates? Let's talk about that. Hi, I'm Tom Byrd with Keller Realty, Atlanta Partners, and today I'd like to talk about the relationship between the Fed funds rate, that's what's making all the headline news recently, and the actual mortgage rates. I'm sure most of you have heard recently that the Fed has hiked the Fed funds rate by 0.75%, which is actually the third rate hike of the year. Additionally, they're projecting a total increase of 1.75% over their next 4 meetings this year. So now what does that mean for mortgage rates? Well, first off, I want to dispel a myth. The Fed fund rate is not your mortgage rate. Simply put, the Fed funds rate is the overnight borrowing rate for the banks. And again, it is not the same as a mortgage rate. So when the Fed hikes their rate by 0.75%, mortgage interest rates do not automatically increase by that same amount. Now you may be wondering, how does the move in the Fed funds rate affect mortgage rates? Well, mortgage rates are primarily driven by inflation, which we all feel, and it's at a 41-year high. Simply put, inflation occurs when there are too many dollars chasing too few goods and services. Or said in another way, demand outweighs the supply. When we look at the past 60 years, mortgage rates have a strong correlation between inflation, and when inflation increased, soon too mortgage rates increased. We have seen that. Now, when inflation decreased, soon after that, we have seen mortgage rates decrease. When the Fed raises their rate, they are mainly trying to slow the economy down and curb inflation. So the Fed hiking their rate should decrease inflation, and as previously mentioned, when we decrease inflation, soon after, we can expect to see a decrease in mortgage interest rates. So again, the Fed funds rate, the one making all the headlines, is not directly tied to what mortgage lenders are offering you as a mortgage rate. So the next time you see the media saying that the Fed has increased their rates, which we're expecting this year, that does not mean that your mortgage rates will increase similarly. Now, I know this is a bit of a simplification of a pretty deep topic, but if you're in the market for a new property and looking at mortgages, please feel free to reach out to us. I'd be happy to discuss any of this in more depth, as well as get you in touch with some fabulous lenders.
Do you want to know more about real estate? Be sure to watch this next video. And don't forget to subscribe. That way you'll know when I drop my next video.